always wanted a Ferrari. I went to the car shows every year when I was little and dreamed of a 2-bedroom house with a 5-car garage. But as I got older, I realized having $1 million and spending it is the literal opposite of one another. So basically, as I show you my Millionaire Portfolio results today, just imagine a Ferrari, or maybe 2, because that's where I'd need to fund the car if ever I wanted to go for it. I'm curious, would you? How much money would you have to amass before you would splurge on something like that? Come on, entertain me. Leave a comment. Okay, so now I'm going to show you my stock dividend cash flow for December. Then wrap up with the total for the quarter and my forecast for next year in terms of cash. Here we go. Now, as we went through last time, my dividend income for October was $4,603.25. In November, $3,750.90. And today we'll be filling out December and then the total for the quarter. Now, I've got all of this mapped out for the entire year, and I'm excited to share it with you as we go through the journey together. So let's dive into the December detail. Okay, so starting in week 1, the first payout was Intel. Now, you know I'm long on chip makers because that's going to be a huge industry in the next several years with all the chips that are essentially on back order. So we've got Intel here at $109.19 and then another one for $8.04. Now, as a reminder, when you see multiple listings, that means that I actually hold that position in multiple locations across my 2 accounts in TD Ameritrade and Fidelity. All right, so the next one is Shaw Communications. That's a Canadian telecom company. So we got $46.33 there. We have a Vanguard product here, which is tax exempt. That means that I'm holding that in my taxable account, so I don't pay taxes on this, $14.65. Wells Fargo has actually been a great one for me. I picked it up when it was at rock bottom during the pandemic, and they've just come back hugely. So $14.10 there. This is a growth play for me. It's a low yield payout. But Zoetis, essentially, if you have a cat or a dog and you turn over any of the prescriptions that you have, including like HeartGuard and things like that, you'll see Zoetis on the back. So they're just a huge animal pharmaceutical company that's growing tremendously. Female leadership and a great board in place there. So very excited about what these guys are going to be doing. Pfizer. So going on to week 2, the Pfizer payouts are big. I invested heavily in Pfizer well before the pandemic vaccinations came out, just because I believe in the company, I believe in the leadership, and I know they have a really good drug pipeline going on. Obviously, they've kind of won the game with the COVID vaccines, and are coming out with the pills now. So they just have a massive, massive amount of kind of a treasure trove of money to fund their research now, and also fund the dividend for a very long time. So I'm long on Pfizer. So we have $456 here, $110. So I'm holding it in 2 locations. Then we go into some of the kind of steady eddies. This is a electric company. If you live in the South, Southern Company, Georgia Power, Alabama Power, etc. So 3 positions here, $70, $40, about $50, and then $47 here. We have now Johnson & Johnson. It's a dividend favorite, not quite as high of the yield as Southern Company, which is about 4%. Johnson's somewhere in the 2 range. But they're steady. They can pay their dividend forever and are a dividend aristocrat. Then we have a REIT play, which is HIW. Not going to go into the detail on all of these, but it's kind of a live-work play, kind of a REIT. We have a bond fund, actually, which is Angel. It's fallen angel funds, bonds that have come out of favor but are actually really high yield. So I just kind of like the way they structure their product. We have PFXX It's a mouthful there. But essentially a preferred stock ETF at $25. Another position of Johnson & Johnson paying out $76.93. Then we go on to UPS. I just love UPS. We've got, again, female leadership here. Carol Tomei killing it out there with UPS. I don't think that those brown trucks are going away anytime soon. I don't think that the e-commerce trend is going away anytime soon. So definitely long on UPS, couple of positions, $15 and $15. Discover, one of my all-time best stock appreciations in the last year. All right, moving on into Microsoft, several positions here, $82, $11, $8, and $3. Microsoft, obviously, everybody knows their products, and they're not going anywhere. A solid growth stock and not so much a yield stock. So that's held for growth reasons. Then we go into Target, $10 there. I do love Target. I like their principles over Walmart's principles. And, they're a little bit of a smaller company, so they're actually going to be growing appreciating in terms of stock a little bit better than Walmart. All right, now we get into Chevron at $187. That's kind of a bigger payout and a bigger yield there. I think it's about 4.5%. IBM is a much bigger payout. I do like IBM. I know they've been a dog for a long time, but we've got new leadership. They are spinning off old parts of the business that are not performing, and I'm excited about the AI and the cloud stuff that they're working on there. Another position for Target here at $48. A couple of more positions for Chevron, $241, $232. And a couple of more positions at IBM. This is where, guys, I'm getting all my cash flow, is really focusing and putting additional bets in some of these higher yield plays that I think are going to be actually growth stocks as well. So that's just something to keep aware of. A couple of positions here at Exxon. I picked up Exxon relatively recently just because of what happened at the board meeting, where they're essentially forcing Exxon to start getting more serious about environmental issues, carbon capture, things like that. I do like that, and that I can be down for. So going into week 3, we've got one of my favorites, 3M. So we got $96 and $94 there. A couple of ETFs here with SPFF and SCHD. I'm not an ETF hater. Definitely can hold a couple of those just for diversification. So there we go there. MET. I double and triple checked this. Could it be possible that I have $78.73 and $78.73 and they be separate? So yes, this one is paid out in my TD account. This one was paid out in my Fidelity account. I have no idea how I got the exact same amount, but there you go. Next we have this. You're going to see this every single month. So check this out. I mean, $100, $100, $25. We got $225 coming every month, guys. Love Realty Income. That thing just continues to churn out money every single month. Don't have to think about it. Don't have to worry, in the 4% range. Then we have Nextra Energy, which is a growth stock for me as well, low yield. EXPD, these are essentially logistics companies. It's a logistic company, and so it's also a growth stock for me. ED is a power company out of New York. So $7.91 there. We've got Stag, which is another awesome REIT. It's a commercial industrial REIT, $34, $18. We have Old Republic at $11.90. It's a high yield play there. We've got another energy company at Duke. If you're in the Raleigh area or North Carolina, my gosh, you know that Duke Energy is growing like crazy because the population is growing like crazy. So $160, $29. Prudential, recently I've been looking at Prudential. They have a really good yield, and I like the rock, like it quite a bit. So I picked up $82 here, $21 from Prudential. Next we have Qualcomm, which is another chip maker, $42. Kraft Heinz, man, Warren Buffett, what are you doing, man? $6.53. The stock has been a dog. I don't know what I'm going to do with this. Wait for the turnaround or sell? Need to do a little bit of research. All right, and rounding out week 3, we have Lindy. I just love Lindy, man. Maybe I'll do a whole video on Lindy. It's just too much to get into, but essentially it's a chemical logistics company, and it's impossible to compete with these guys. So this is a growth stock, relatively low yield as well. All right, going into week 4 here, we've got a couple of ETFs here. We got some Eaton Vance, $10 there, another Lindy position. And one of the reasons why things pay out a little bit different, just FYI, is this is an example where one is in the TD account and one is in the Fidelity account. What I'm realizing is that Fidelity actually pays out usually quicker, which I kind of like. Man, Fidelity and TD, they're both good. It's just like they have different, awesomeness. So anyway, try to spread the awesomeness across the two. Then we have, Principal Financial Group at $32. We got VGT, which is a Vanguard ETF at $4. We got a couple of bond funds here, BHK and BBN, $7.81, $3.45. Canadian Pacific Railway. I did not buy these shares. Yes, this is my account. Yes, this is my stuff. But I had a different railway, and they just bought it out. It was Kansas City, and they just bought it out. So now I got Canadian Pacific. I guess I'm going to hang on. I'm going to look into it. I'm going to watch. In general, rail stocks are amazing. If you hold them for 10, 20, 30 years, they're going to just go up and up and up. Think about it. Low competition, high barrier of entry. It's everything you're looking for. And when you are evaluating a stock or an industry, a company. So anyway, on to NVIDIA. They paid me $1.68, but it's my number 1 performing stock for 2021. So come on, let's give it up for NVIDIA. Chip maker, awesome. If you have a PlayStation, if you have a Nintendo game system, if you have pretty much any technology, you've got a NVIDIA chip in there. So just love it. Long-term holder of NVIDIA. All right. Once again, this is an example of TD paying late, 2000 and late to the game. But anyway, I'm not going to hate on the $135 from Duke coming out of my TD account. Wrapping up the last week, week 5, we got VOO. Love those Vanguard products, VOO, VTI. You can't go wrong if you just buy those low-cost index funds. We got FedEx here. They had a recent massive drop in stock, so I picked them up, right, opportunistically. One of my favorites is Shaw here again. You're going to see them all over the place every month from me because they pay every month, and it's that Canadian telecom media company. We got Public Storage. People buy stuff. I don't. I buy investments, and then they have to store their stuff because they don't know what to do with their stuff, and so they just open up these containers and they put them in there, and then they can't get out of them, and they don't know what to do with them. Well, somebody just paid me $65.63, so thank you for that. I've got VNQ, which is real estate. One of my thoughts in 2022 is that real estate is just going to continue to go bonkers. So, loving my real estate ETF here. We got another tax-exempt payout here. We've got a Vanguard product, VWell, And we've got the tax exempt one at VWAHX. And then VTI, T. Rowe Price, a couple of positions here, $4, $5, $30. Some more. These are the long-term gains from VWell. And then we've got Bank of America, $50 from Good, 16, and $1, 3 positions good. Avgo, another one of my absolute favorite chip stocks at 138 and 12. We got another couple of ETFs here, which is SPHD, PGX, which is another preferred stock ETF, another SPHD. We got a couple of my River North Opportunistic, which is a muni tax exempt product, $44, $3 there. And finally, yet another payout of Shaw at $2.40. So where does that leave us, guys? Essentially, for December, puny week 1 at $193, awesome week 2 at $2,749. Week 3 came in just above $1,000 at $1,031.50. Week 4, a puny 118, $118, and then lastly, the last week of the year was $805.86. So the total for December, I've got it kind of hidden away here, is $4,899.07. Man, I wish that had been $5,000. So close. So let's add up the quarter, $4,899.07. We've got $4,899.07. And where does that leave us? For the quarter, we total $13,253.22. So across October, November, December, that's the total for the quarter. Now there's one more thing I want to show you, which is my cumulative passive income, which is a little bit different from my dividend income because I had some other investments coming in, mostly interest bearing. So at the beginning of the year, I was forecasting around $40,000. But over the course of the year, I really started optimizing. Every week, every month, I took a look at stocks. I took a look at what interest bearing instruments I had, like bonds and CDs, and I kept moving money around. So at the beginning of the year, I forecasted around $40,000, but by the end of the year, I had ended up with over $50,000, $51,680,000 to be exact. So for next year, I hope to continue to optimize and to raise that level. Right now, I should be on track to reach $65,000 in passive income. And if I continue to optimize and maybe add some additional cash from the sidelines, I could get that level to above $70,000, maybe even reach a stretch goal of $75,000. So will I get there? I don't know. This is my journey, and now you're just on it with me. Who knows what's going to happen, right? So I might have to withdraw some if something, bad happens, or, maybe I'll be able to put more in. We know that there's going to be a special dividend from AT&T, but there's also going to be dividend cuts. So we'll see if any of that forces me off track. Only time will tell, and I'm glad you're here with me to see what happens. I hope that was inspirational to you and that you join me on my journey next year, because honestly, I'm just getting started. Listen, I'm not an expert. I'm just a girl in the world doing this by myself. And okay, I do have an MBA and have consulted for companies around the world, but still, I am humbly not a finance guru. So I'm excited you're here with me. Perhaps I can learn from you too. Let's grow and win together. If you have December dividend stocks to recommend, please do. Let's make this next year count. Okay, that's it for today. Thanks for watching, and remember, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.